If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel.
The world is never going to be the same again.
I'm worried about the world.
The mass chaos and crises that there was in the world, it's going to be just like that now.
This is not an accident.
How long is it going to last? Longer than even for those of you that have some cash in the bank, way past your cash reserves.
Out of 100 people, 4 will get the message.
This thing isn't going to be over in a few weeks. This thing isn't going to be over in a few months.
Now through May 31st, get access to 7 of our most popular products, spanning from crypto recommendations to free stock picks, completely free for your first 7 days. No credit card required, cancel anytime. See for yourself why more than 1 million people love Stansberry Research. Simply visit trystansberryresearch.com.
Hi everyone, this is Daniela Cambone and welcome to a very special edition of Stansberry Research, because 1 year ago we held the ultimate debate on the topic of gold versus Bitcoin between gold financier Frank Giustra and MicroStrategy CEO Michael Saylor. The debate will go down in history as arguably the best one out there on this very topic. It has amassed over 2 million views, solidifying one of the biggest questions of the 21st century thus far. Which path should you take in order to store your wealth and maximize gains? Joining me today to reflect back on the year and see what has changed in the Bitcoin versus gold debate is Jim Rickards and Max Kaiser. We're going to start today with Jim Rickards. He is a multiple New York Times best-selling author, often on the Times of Gold, but always a voice of reason. Jim, it's always good to be with you. I know we recently saw each other, so thanks for coming on. But, you know, we have to have you as part of this anniversary edition.
Thank you, Danielle. Great to be with you. Our last interview, I know, had sort of caught fire, got a very good following. Not as big as the gold Bitcoin debate, but we had a great interview, and I'm glad to be back.
Yes, and I'm glad you brought that up because we did talk Bitcoin in our last interview, and a few viewers had a specific question for you, which I will bring up. But first, just reflecting back on this year. I mean, gold versus Bitcoin. Have we made any strides? Have we come to any conclusions more than a year ago?
Yeah. The answer is no, but I can explain why. I'll give you a longer answer. I did my first gold versus Bitcoin debate in 2010. So it was not long after Bitcoin, as the paper came out in 2009. So I've been doing this for, over 10 years. I've been in many of them. I'm always happy to participate. I'm always happy to share my views. The subject never made any sense to me, still doesn't. I can talk for 2 hours about gold. I can talk for 2 hours about Bitcoin. But when you say gold versus Bitcoin, I'm kind of like, oh, fish versus bicycles. I mean, where's the debate? They're separate things, separate characteristics. Again, I could talk a lot about them. But when people say, well, do you want to put your money into gold or put your money into Bitcoin? Okay, that's a reasonable question. But what about real estate, fine art, or 100 other asset classes that you can think of? And they all have certain characteristics. So yeah, I guess you can, I guess you can have that discussion and do that analysis. But the idea that they're sort of two flavors of the same, from the same ice cream factory, right. I reject that. I don't think they're at all alike. But yeah, you can talk about one versus the other.
So let's be a little bit more specific. If we want to talk about the ultimate store of value, that's what it comes down to. And that's what the debate was shedding light on. Now, JP Morgan has put together a list, and I don't think it's a new list, of basically what defines a store of value. Durability, fungibility, portability, whether it's divisible, scarce, verifiable, free from censorship, and lastly, history. I'd like to just kind of go through that checklist with you. I mean, they kind of gave most of the points to Bitcoin in their rundown, but I'm curious to get your thoughts. So if we start with the first one, durable, is there a clear winner there in that category?
Yeah, but happy to do that, Danielle. But before we jump in, I always caution viewers. JP Morgan's in the business of selling you stuff, so I would think that any list that they come up with would have behind it some desire to expand Bitcoin trading or Bitcoin derivatives or whatever. So I'd kind of view it with a
Right.
little bit of
Yes.
caution. I think that's
Yes.
in order. And I would also make the point that store value. Okay, yeah, Bitcoin's a store value. Well, again, we'll get down the list. But so's real estate, so's a house, so's gold, silver, fine art, oil in the ground, many stores of value. That doesn't qualify you as money. And I realize you said store value. You did not say money. But the traditional definition of money is store value, unit of account, and medium of exchange. That you sort of have to tick those three boxes to be money. Although recently there's some scholarship. One scholar wrote an interesting paper. He had a matrix. He had 27 characteristics of money, and like 10 different kinds of money across the top across the y-axis. So it was like 270 boxes you could check to figure out, which tells you something about money today. So sorry, with durability, that was the first one.
Yeah, I mean, are there any clear winners here, like durability, portability?
Durability is an easy one. Gold is durable. In fact, gold is almost impossible to destroy, which is an interesting characteristic. You can use high explosives, but all you do is spread the gold molecules and they fall in the earth and dig them up again, 10,000 years later. Gold does not rust. It does not, disintegrate. Like you mine gold. One of the ways you mine gold is you put sulfuric acid in the ore and everything else dissolves and the gold doesn't, and it falls to the bottom and you kind of scrape it off. So that's how durable gold is. And that's one of the reasons it's always been a form of money. Bitcoin's not durable. It doesn't come close. All I have to do is, if you have some Bitcoin, all I have to do is turn off your electricity and your Bitcoin is gone. So I would say that's not durable at all.
Okay, so next one is one that Bitcoin enthusiasts like bringing up, portability. They like to argue that, look, Bitcoin is extremely portable, gold not so much. I can't lug around my ounces of gold all over the world.
Well, you can, but just to come back to the durability point, when I say, if I turn off your electricity, your Bitcoin's gone, which is true, but people go, oh, well, that will never happen. I'm sorry, this morning's headlines were, Russia shuts off natural gas to Poland and Bulgaria, I believe was the other country. So, those people are going to be freezing in the dark before long. So it's not far-fetched to say that power can go out or remain out in a lot of places. That's not a stretch at all. Portability, yeah, but there's a lot of conditionality, which is you can send Bitcoin all over the world through the internet. Yes, that's true. You can hand it off in a flash drive or some sort of cold storage, so-called wallet, cold wallet. Yeah. So it's portable. Gold, gold's heavy. That's one of the interesting features of it. If you've never held a 1 ounce gold coin in your hand, I know you have, but for a lot of people, you hand them a gold coin, it's like, oh, kind of heavy. It's a surprise. But, going back in certainly the 19th century, early 20th century, if you were going to India, let's say you lived in London, you were going to India and you were going to be on, there's no real air travel at that time and you'd be on a ship, you would take a purse of gold coins. They were quarter ounce. They were the British sovereigns is what they were called. We have a quarter ounce American Eagle. They had a certain value and you would take a certain number of them and you'd get off the boat in, Bombay at the time, today Mumbai. And it was money good. The fact it was a British sovereign, well, a British colony at the time, but you could take that anywhere in the world and you had money. Now you had to protect it and security and safes and all that stuff. But Bitcoin has its own vulnerabilities, being in digital form. Just talk to the Canadian truckers in Canada, where our neo-fascist Deputy Prime Minister, Chrystia Freeland, contacted the cryptocurrency exchanges and got the accounts of the truckers and froze all their Bitcoin. So portable, yeah, it's portable as long as the government doesn't seize it, and then it's not so portable. So yeah, but I would grant that Bitcoin is pretty portable, assuming the government's not trying to take it.
All right, let's keep going on this list. Fungibility. Does one of the assets take an edge over the other? edge over the other here?
That's an easy one. Gold's completely fungible. I mean, it's gold is an element. It's atomic number is 79. Like, it doesn't get, certain characteristics of atomic structure, but it's not an alloy. It's not mixed with anything else. Gold is gold. And in fact, one of the things you can do, one of the things that has been done recently, for example, Germany, the German Bundesbank has been, and others, Netherlands and other countries, are repatriating their gold. They're calling up the Federal Reserve Bank of New York and saying, hey, send me my gold, because a lot of it was stored. People think the U.S. gold is at the Federal Reserve Bank of New York. It's not. U.S. gold is at Fort Knox and West Point. The Federal Reserve did have 6,000 tons. I think it was the largest single depository in the world, close to the Bank of England. But all that gold belongs to foreign countries. They're calling up and getting it back. But the Germans, so the Fed says, okay, here are your bars. Those bars have been around since the 1920s. They're really gnarly. They're not like the nice, London Bullion Market Association bars. They're pretty close to pure gold, but they might be like 2 nines instead of 4 nines. So the German Bundesbank sent the gold to Switzerland, had it melted down, re-refined into 4 nines, 99.99% pure gold, before being delivered to the Deutsche Bundesbank's vaults. The point being, you can't trace that gold. If you took a new bar at the Deutsche Bundesbank, there is nothing, no way to tell you that that was an old bar from the Federal Reserve, gone, because it's an element. Bitcoin is different in the sense that, Bitcoin's a Bitcoin, but they're all, because it's digital and because it's encrypted, you have addresses and you have a place on the blockchain. Now, people go, oh, the blockchain's anonymous. Well, it's not anonymous at all. It has a digital address. Now, it doesn't have your name on it. It doesn't say, Jim Ricketts or Danielle Cambone, but it does have an address. Criminal investigators love it because the blockchain's open, and I can trace the entire history of a particular Bitcoin. So all I need is one bit of forensic evidence to find out who you are, and then I've got your entire chain of transactions from day one. So it's not really fungible. Each Bitcoin has its own sort of digital footprint that enables you to trace people back.
I'm gonna skip over divisible. I think it's pretty straightforward. I want to get to the ones probably that ignite the greatest debate. Let's go to scarce. Feelings on how scarce Bitcoin is versus gold. Curious to get your thoughts here.
At the end of the day, Bitcoin will be more scarce, and that is a fatal flaw because Bitcoin's capped out at 21 million coins. We're getting close. The last time I checked, we were somewhere between 19 and 20 million. So we're getting closer to the last Bitcoin being mined. We're not there yet. We may never get there for the simple reason that each math problem becomes harder than the one before. And the amount of computing power and processing power and electricity that you need to do one more hash to get towards the final Bitcoin goes up. At some point, it just won't be worth it. But whether it's 21 million or some smaller number for the reason I just mentioned, there's a cap. Now, people go, oh, yeah, but the Bitcoin community can get together and by consensus change the cap. Okay, you just destroyed the whole meaning of Bitcoin. The whole idea was you can't mess around with it. If you suddenly start doing that, and it's not physically impossible, it is possible. What happened to the trustless medium, the trustless asset? Well, all of a sudden you got to trust somebody, so you're kind of back to the banking system. But let's assume that doesn't happen. Gold is very scarce. People talk about rare earths. Actually, rare earths are not that rare. They're low density and expensive to mine. That's true, but they're all over the place. Gold is not. All the gold in the history of the world, it's an estimate, but about 200,000 metric tons. That's it. It would fill up a large swimming pool. It's all the gold in the world ever. But there's still mining output. Now, the mining output is about, give or take, 1.7, 1.8% of the above ground gold. So gold is going up about 1.8, give or take, percent per year through mining. Guess what else goes up about 1.8%, maybe a little more? Global GDP. In other words, and I'm not saying there's a force behind it, but it's just the case that gold's growing about the same as global GDP. Global GDP might grow a little faster, but they're about in sync. The problem with Bitcoin is when they hit the cap, and they're just about there, that has a huge deflationary potential, meaning if you have a fixed amount of Bitcoin, which you will, and then growth keeps going, which it will, there are ups and downs, but so growth keeps going and the amount of Bitcoin is fixed. That means, in theory, each Bitcoin gets you more assets, because if this is fixed and this is growing, you're going to get a bigger piece of wealth in exchange for each Bitcoin. That's deflationary. And that's why, in other words, the Bitcoin are worth more measured in dollars. And that's why a lot of smart people in Silicon Valley and Ray Dalio and all these guys are buying it. They're like, well, it's got to go to $500,000 or whatever because of that. But what they're missing is that the thing that drives the value of money is not so much the money, it's credit. It's people being willing to lend to each other. And by doing that, whatever base money supply you have, the M2 is bigger, and then you put credit and bonds and government debt and derivatives and all that stuff, pile it up. And that's what drives your economy. I mean, base money is not even close to global GDP. So how do we finance global GDP? Well, we do it with debt. So just to tie that together, who wants to be a borrower in a unit that's deflationary? Nobody, because you got to pay it back. It's more expensive to pay it back. And if you can't be a borrower, there's no bond market. If you can't have a bond market, there's no reserve currency. So Bitcoin's kind of a dead end.
I'm so excited because I have so many questions I want to get to for you. Let's skip to the free from censorship, because when I was speaking with Michael Saylor recently, he really saw the recent executive mandate from the Biden administration as the huge green light for Bitcoin, that it got the okay, that it kind of made it, kind of gave it its credibility factor in a sense. So he sees that as a massive step for adoption. So free from censorship, any thoughts here? Has Bitcoin advanced here?
No, it's actually gone backwards. The thing with Michael, he's never seen anything that isn't a green light for Bitcoin, so that's okay. He's obviously entitled to his views, and I know he's made $5 billion in Bitcoin. It's real money for the time being. But no, when you look at what Canada, what Trudeau and Freeland did to the truckers, with free from censorship, they froze the accounts, froze the bank accounts, seized the trucks, put them in jail, held without bail, no hearings, no due process, and they can't feed their families. So there's your censorship. In other words, Bitcoin can be impounded, it can be interdicted, it can be erased, it can be stolen. China has banned it. Other countries are considering banning it. And I know it's in cyberspace, and there are servers in Africa that you can't touch, at least for the time being, unless the U.S. really wants to get the National Security Agency involved. But it's not free from censorship at all. It's not free from interdiction. It could be seized and frozen, mainly because it's digital. Gold's different. Gold, if you have it in a vault at a bank, and the government can order the bank not to give it to you, that's possible. I always tell people, don't store a bank is the worst place to put gold, because it'll be the first place it gets locked down in a real financial panic. But if you have your gold in a safe, nearby non-bank location, too bad you can't seize it. I mean, you can with a SWAT team, I guess, but it's always possible. But basically, gold is not subject to as much censorship and interdiction as Bitcoin.
Well, they're going to say, but back in the day, they had confiscated my gold, Jim. What are you talking about?
Yeah, that's right. That was in the middle of the Great Depression. That was in 1933. FDR used the Trading with the Enemy Act of 1917 as his legal authority. And they took your gold, or they issued an order that said you had to turn it in at a post office or a treasury substation, and they gave you $20.67 an ounce in paper money that was not convertible back into gold, knowing full well that they were going to raise the price of gold, which is really just devaluing the dollar. So that was the great insider trade of the 20th century. I don't think that would work again. That was at a time when people trusted the government. Actually, you really shouldn't trust governments. I work with the government all the time, and a lot of good people, but from the top down, going through the whole, the lies and the pandemic and so forth, there are good reasons not to trust government.
I guess the final one, history, right? This is a big argument that came out that Frank Juster really hammered home, is that Bitcoin does not have history on its side. It's a young asset, and it has not been really truly tested in a higher interest rate, environment. Given, what are your thoughts here on terms of Bitcoin's performance, given the inflationary situation we find ourselves in and the Fed tightening?
Yeah, I think Frank has it right. Look, Bitcoin sort of survived its first financial crisis. I mean, it came out in 2009, but didn't really get a lot of traction until maybe, 2012, 2013. But it did sort of come through the 2020. That was not a financial panic. It was a severe market recession. If it even was a recession, it was something different in the sense that the government just shut everything down. But it bounced back. So yeah, okay, I'll give Bitcoin credit for surviving that, and it's proved useful. But I would, where I would disagree with Frank a little bit, I would say Bitcoin has 1,000-year history or longer, maybe a 3,000-year history, because that's how old gambling is. And when I think about what Bitcoin really is, it's a casino chip. It is an asset. I don't dispute the fact that it's an asset. Is it money? Not really, because the people say, oh, there's some coffee shop in Brooklyn, you can buy a cup of coffee, they take Bitcoin, I guess. But they immediately turn it into dollars because they got to pay their people. But it's not a useful form of money at all. It's a unit of account. Well, anything can be a unit of account. A baseball card can be a unit of account. That's the least daunting of the main characteristics of money. So unit of account doesn't mean much by itself. Medium of exchange is not a good medium of exchange, even if a few publicity house. But store of value, I'll say it is a store of value, but so is a casino chip. That's the way to think about it. It's an asset. And so if you want to know where Bitcoin's going, I would say, well, study the history of roulette or poker or any other game of chance. And the answer is it can, if I walk into a casino, put $1,000 on the roulette table and get a pile of chips, I could make money. I could lose money. I could double my money. I could walk out empty-handed. It's an asset. I can make or lose money, but that's about it. It's just gambling.
So to that point, because I'll have Max Kaiser coming on the Bitcoin side in a bit, and his argument is, well, gold is dead money. It hasn't done anything in 10 years. The price hasn't moved in 10 years. So if I just share some stats, if you had put $1,000 5 years ago in Ethereum, you'd have 69,000 today. In Ethereum, you'd have around 33,000 in Bitcoin, and you'd have 1,343 in gold. That's $1,000 invested 5 years ago. So the price point comes up. So what's your response when people say gold price just isn't moving? Your money's dying with gold. What do you say? Yeah,
well, first of all, every time I hear those comparisons, I just kind of roll my eyes because you cherry pick your entry point. I could go. I'm not going to, but I could pick it. I could pick 1999, August 1999 as my entry point, and pick a different exit point. And gold outperformed everything, and other stretches it underperformed everything. So that's just cherry picking entry and exit points. It gets back to your first point, Danielle, or one of the earlier points, which is what about the history of it? Okay. By the way, I'm not saying Bitcoin can't go to $100,000. It could go to $1,000, or it could go to $100,000. And I'm not making a forecast. I'm making a statement that either one of those things is possible, and that's where I come back to the gambling analogy. Whatever. I mean, the thing about gold. Here's the thing that's least understood about gold. Here's what people don't get. It's not about the price of gold. It's about the price of everything else measured in units of gold. In other words, gold is your yardstick. Gold is your benchmark. One of the questions I get most frequently in interviews like this and many others is people say, hey, Jim, I don't get it. The dollar's going up, but gold's going up. And, I thought when the dollar gets strong, gold goes down and vice versa. And I say, well, your metrics are all wrong, because when you say the dollar's going up, people are referring to DXY, or the Bloomberg Dollar Index, which is a basket of currencies, mostly the euro. But there's no gold in DXY. And when you say gold's going up, what I would say is no, the dollar's going down. It used to be 1/1800th of a dollar Sorry, a dollar got me 1/1800th of an ounce. Today, a dollar gets me 1/1900th of an ounce. Gold's the same. What happened is the dollar went down. So gold doesn't really change. That's what I say. It's an element.
I love having you on, Jim, because you have done your homework and then some. And Max Kaiser says, well, anyone who studied Bitcoin for 100 hours would convert and become a Bitcoin maximalist. I can assure you folks, Jim has studied it for thousands of hours.
Thousands of hours is right, yeah.
Right. So my question to you is, why haven't you become the maximalist? You know, what's stopping you from embracing it?
I have, well, I said it could go to 100,000 or more. If it does that, what's the dollar really worth? That's the problem. Or it could go to $1,000. I have moral and ethical objections, actually. I work hard and make money, invest, win some, lose some, but I kind of look at the work ethic aspect of it. And the thing about Bitcoin, and this is where the gambling comes in. I do play roulette, and I like it better than Bitcoin because they give you a drink, you know. But I do it for entertainment. I do it for fun. I like the math problems, but I don't really think that's how I'm going to feed my family. You know, Bitcoin is a zero-sum game or a negative-sum game. For every winner, there's a loser. For everybody who bought Bitcoin at 1,000, it went to 19,000. You know, nice going. You made millions. Michael Saylor made billions. You know, there's some garage mechanic in South Korea who bet his inventory on Bitcoin at the wrong time and lost it and committed suicide. So I guess I'm repulsed by a so-called form of money, because I don't really think it's money, that you know, the winners are well known. I can name a lot of them, but the losers are everywhere. And I guess I don't like the idea of gain without some work or effort, mental or physical. So I do have ethical objections.
And thank you for answering that. I guess my final question, I kind of want to bring it back to the last interview we did, which as you said went viral, and I encourage everyone who hasn't seen it to watch it, because it's an incredible two-part interview. At the end, we spoke about Bitcoin, and the viewers picked up that perhaps you were starting to become a little warm to the idea of Bitcoin, a little more comfortable with perhaps adding Bitcoin, but I guess based on your last comment, maybe not. But the question, you know, the great point you brought up there is that you don't necessarily see it as ever replacing the U.S. dollar, which is, you know, the center of a lot of conversations. But you did say that it challenges the notion of what is money, and you introduced this concept of moneyness. So the folks at home are writing and saying, did Jim warm up a little bit to the idea of Bitcoin, and would he consider adding Bitcoin to his portfolio? And again, based on your last comments, maybe not, but...
Well, my portfolio shouldn't be the world's portfolio. I mean, everyone needs to make their own decisions. And I have never, you know, ranted and raved, but don't buy Bitcoin. I don't do it personally. That's me. I gave you my reasons. But I have very good friends who buy Bitcoin. They're interested in what I have to say about it. They ask me all the time. And, you know, I've said this before, but, you know, in the 1960s, there was a rock and roll tune we used to dance to, and the refrain was "Shout, shout, knock yourself out." And if you want some Bitcoin, knock yourself out. I mean, do it, you know. And again, Michael Saylor is a real multi-billionaire on Bitcoin. I don't deny it. I have good friends who do it. So I've never yelled and screamed about people not doing it. I have my own reasons for not doing it. But just to very briefly, it won't replace the dollar as a global reserve currency. That's nonsense. But maybe the dollar will fail as a global reserve currency for other reasons. But it's the point I make, moneyness means that things are posing as money, have certain characteristics of money, but they're not exactly money. What's really happening is we, all of us, you, me, and everyone watching and the whole world, are immersed in an electronic environment that we don't understand because we're immersed in it. And we're losing the thread. We're losing the idea of what money actually is.
You know, you mentioned Michael Saylor, multi-billionaire, and I always chuckle when the cyber hornets come for Frank Juster saying, well, you know, have fun staying poor. Because I just want to say, well, you do realize he is also a multi-billionaire.
Right. Yeah. Frank's one of the
in
wealthiest
gold.
men in
Yeah.
Canada, wealthiest
Right.
man in the world. Frank's
Right.
in touch with him recently. He's doing fine.
Yeah, he's doing fine. No need to worry about Frank Justra. But I really appreciate your neutral voice. And speaking about rock and roll, I have Max Kaiser coming up now to talk about Bitcoin's journey this past year. But I really appreciate you looking back with me. And I guess we can come to the consensus that so much has changed, but nothing has changed.
That's a very good point. I just studied 1,000-year history of Venice, and money came and went, and empires rise and fall, and in a way, nothing has changed. I think that's a good way to sum it up, Danielle.
All right, Jim, thank you so much for being with us. And before we bring on Max Kaiser, I just want to invite everyone who didn't get a chance to watch that debate to make sure to catch it. It's still very relevant today, and we'll put up a link to that debate in the description below the video box. But it's time to talk Bitcoin. How could I not invite Max Kaiser, one of the most recognizable faces on the planet, period, but especially when it comes to Bitcoin. Max, always good to see you. Welcome back.
Oh, yes. Hi, Daniela. It's great to be back on this historic. What?
No, I feel the sincerity.
Yeah,
1 year.
there's an historic event. A year ago, Michael Saylor mopped the floor with Frank Justra in an awesome debate. Gold is still in the dumps. It's still the same price it was 10 years ago. Gold is dead money. Bitcoin, meanwhile, is continue to make inroads and triumph after triumph after triumph. So is Frank going to go full into the olive oil business now and give up trying to be a money manager because he's almost as bad as Peter Schiff?
I didn't think you'd come out blazing like that today. And
well,
gold was
let's
not
get
the
into
same
it.
price
I mean,
10
you're in
years
the
ago.
media. Let's hit the floor running now that CNN is going
I thought we were
bankrupt
gonna
and
have-
all mainstream media is being discredited, and Elon Musk owns Twitter. You need to step up your game.
Oh, I've stepped it up. Everyone watches Stansberry Research, as you know, Max. And that's why we had the greatest debate. I know there have been other copycats, but it was the greatest debate to take place. But let's reflect a little bit on the year, because there has been a lot of great strides for Bitcoin, particularly with embracement from certain government officials, even though I know you're not a fan of government officials per se. But, when I was speaking with Michael Saylor in Florida a few weeks ago, and he really saw, Biden's recent mandate as a huge green light for Bitcoin. I just want to get your thoughts on what you feel, looking back on the year, the biggest moments for Bitcoin, because like I said, we saw, the executive mandate, we saw Treasury Secretary Janet Yellen speaking favorably in terms of Bitcoin. We saw the news about Fidelity. So what for you are big steps of adoption?
Well, it doesn't matter what any government says about Bitcoin, because Bitcoin is absolutely decentralized and exists entirely outside of any individual, group, corporation, or government control. Governments are just waking up to the fact that they have no input in terms of impacting Bitcoin whatsoever, and they're moving from thinking, oh, we're going to ban Bitcoin, knowing now that they can't ban Bitcoin, to understanding that it's a fear of missing out, or FOMO. The countries that hoard and mine Bitcoin the biggest and the fastest are going to be in a much better position than the latecomers. That's the current position amongst various governments, except for in Europe, where they are literally brain dead, where the EU is coming out and making it clear that they're not interested in participating in the 21st century economy whatsoever. They died. The only thing, but they haven't been buried yet. So that'll come probably in 2022, because I noticed that the euro is going to be parity with the dollar and heading to new all-time lows, probably in the 60-cent region. So the entire EU can be flushed down the toilet, because the leadership there are bureaucratic, sclerotic morons. They can be just disregarded entirely. I think Elon Musk will probably buy France and turn it into a place that's worth going to.
Just side note, were you happy that he bought Twitter?
Sure,
You
why
love free speech.
not? But Twitter was being manipulated by folks that were against free speech, and Elon Musk recognizes that free markets and free speech are are part and parcel with vibrant capitalist free market economies, and he'll bring that to Twitter. And we're going to see a much improved Twitter, and I probably go public again in 2 or 3 years at 2 or 3 times the valuation he took it private.
Yep. Okay, so not to talk about Twitter, but I just was curious to get your thoughts. But going back, I think it's interesting how you say you don't care what the government says, because Michael Saylor did, saw the announcement as a massive boost for Bitcoin adoption. So you're saying Bitcoin didn't need it? Were you not as excited as him? Because he really saw it as, this is a huge green light. This is what the asset needed.
Well, you come to Bitcoin who you are. If you're somebody who's into education and you're a professor and into monetary history, you write a book like Safdien Ammous. If you're somebody like Michael Saylor, who is in the software business in Virginia, with who's kind of close to the center of power in D.C., who does, I would imagine, some contracting work for the government, you would have some comments about the U.S. government. Michael Saylor has also said he sees Bitcoin as being world reserve asset and the U.S. dollar as being world reserve currency. Now, I never understood that argument. I don't think that argument makes any sense. Nobody who's looked at it agrees with him on that. And that's not going to be the case whatsoever. The dollar is completely being destroyed. It's being flushed down the toilet. The price is at a high relative to the last few years of performance, but usage amongst global economies is dropping. It's under 60%. It'll soon be under 50%. And we've seen a major sea change in the last few months, Daniela, because we went from a 40-year bull market in the bond market and a 40-year bull market in the, let's call it the Reagan-Thatcher era of deregulation and financialization. We are now in a new era, which is going to be driven by commodities, right? Russia basically called time on the era of financialization, and we're now on a commodity-based global economy. Russia, the ruble is reflecting that. It's trading at some recent highs, as commodities take center stage. And the ultimate commodity, the commodity that Paul Tudor Jones called the fastest horse in the race, is Bitcoin. And it'll outperform all other commodities and all other securities and remain as the best performing asset for the next 10 years. But I don't see the U.S. dollar, as Michael Saylor argues. I don't buy that argument whatsoever. So I'm not surprising that he would have a favorable disposition toward comments coming out of the U.S. government. I don't see that as being important or relevant either in any case, but he's a guy who supports dollar as world reserve currency. So, I mean, if it's his MO, that's fine. But, I don't agree with it. And the Bitcoin is not in any way tied to any government's position toward it. Governments have only one decision: either start mining and hoarding Bitcoin or become irrelevant.
Okay. So let's just stop. You mentioned Russia, so let's go there a second. And I want to give you kudos, because 2 years ago, at my former outlet, you had called out saying that you could see Russia working on linking the price of the ruble to gold and other commodities. And that's basically what we're seeing today. They say they're working on it, but as you know, when we hear news reports that they're working on it, it usually means it's already done. What does this really mean? What does it imply? How big is the impact?
The impact is huge. As I've just been saying, the transition from financialization to commodification is underway. So Russia is demanding payment for gas in rubles. And the EU was reluctant at first, and they've said, well, we're going to do a run around this particular stipulation by going through some intermediaries, so we're not really doing it in rubles. But now they're saying, actually, we're just going to pay in rubles. And this is what giving a lot of strength to the ruble. And so Russia is now talking about tying the ruble to gold, having a gold-backed ruble. And I also talked about China at that time. I think China and Russia, Iran, and the other BRIC nations are all in a good position now going forward. They're all commodity based. And this idea of tying currencies to gold will become much more talked about in the near future. Russia's obviously come out and said it now. China is still, I think, going to come on board. We could see, a joint effort to tie those currencies to gold. So yeah, this is what's happening in the gold market, and it's not a good look for the U.S. dollar.
So let me ask you this. You and I both know Russia has been buying gold all these years. Have they been preparing for this exact moment?
Absolutely. Look, I mean, what I find remarkable is that Russia, for the last 20 years, has communicated in a very open and transparent way what they're doing, why they're buying gold, their position toward NATO, their position toward various geopolitical events that are going on. They have not been hiding their thoughts at all. And now, after getting to the point where they felt that their message wasn't getting across, we now have entered a new era, and there's a conflict in Eurasia. And but this should not be a surprise to anybody. But what's remarkable is that the response of those who are clinging to the world of financialization still think that they're going to print their way out of this problem, right? So the central banks still think that, you know what, we just need to print more money. People are saying, but they don't understand that actually that just causes the inflation that's empowering Russia. The tactic from the Russian point of view, if I can put myself in the mind of the strategists in Russia, is that, look, everybody against Russia is going to fight us by printing money, which only makes our commodities worth more in value and makes the ruble stronger. So how, bring it on.
So, Max, how far away are we from the demise of seeing, the U.S. dollar no longer the reserve currency of the world, and what replaces it? Is it a basket backed by commodities, or what does it look like for you?
Right. So you go from a unipolar U.S. dollar reserve currency to a multipolar world with a few different currencies out there. So you have the dollar, which will be a fading currency. You have a gold-backed ruble, which is going to be aligned with China, Iran, Brazil, the BRIC nations. And then you have Bitcoin. So Bitcoin is being adopted by countries. We see that now in Central America with El Salvador. And we can talk about this new fund we're starting, by the way, in El Salvador called Elzonte Capital. You can get information about it if you do an email to hello@elzontecapital.com. And we'll see other regions in Central America and Latin America begin to adopt Bitcoin. And now we see more action in Africa. There's a country in Africa today that just announced they're making Bitcoin legal tender. So that will be a big theme in Africa. Those countries looking to leapfrog the entire fiat money system and banking system and just want to leap into the 21st century, that they can just go to a Bitcoin standard and bypass all this malarkey with central banks and fiat money and all the bureaucrats. They can just go to a hard money Bitcoin standard and be immediately participating in the economics of the 21st century. So we're going to see that. So those are the three developments as the U.S. dollar fades away. You get a gold-backed currency in those countries that have been aggressively buying gold for decades, principally Russia, China. And then you have Bitcoin, which is really the kind of the breakout surprise hard money transformative currency in the world, and that has its own dynamics.
Why can't you have room in your heart for gold? Once upon a time, and I've known you a long time, I know you embraced gold. You embraced silver. What caused the change that you were like, you know what, I can't have gold anymore. I can't have silver anymore. It just has to be Bitcoin. Why can't it be both? Bringing it back to the debate. Why can't it be both for you?
Well, as I think I've pointed out, so number one, you don't have true price discovery in gold, right? The price, as we see, it doesn't really move, even though the inflation is absolutely out of control and the money printing is out of control. Gold is not moving because you don't have genuine price discovery in gold because there's too much of concentrated in few hands.
It is moving, but you want leaps and bounds.
No, it's not moving. Over 10 years, it's done nothing. It's at 0% in 10 years. It's been dead money for 10 years, Daniela. That's dead money. I mean, it's underperforming cash. It's underperforming negative interest rate sovereign bonds. It's probably it's horrible. It is, so you don't get any price discovery. And the industry, that Frank Juster represents, a point made in that debate that you had a year ago with these two, Michael Saylor made the very excellent point that the industry itself is constantly selling gold. And they're not putting gold on their balance sheet. They're not hoarding gold. They're just gold salespeople. They talk a good game, but they're not actually for gold in that way. The industry has a long track record of dumping its own product and manipulating the price of its own product. So the industry itself is corrupt and nonsensical. So it's just, if gold was free to trade based on what's happening in the inflation environment, that would be a different story, but it's not. And now you've got a competitor with Bitcoin, which is eating gold's lunch. And second of all, the mining of gold, I got to the point where I couldn't accept it anymore. It's too toxic. It's too poisonous. There's too much slave labor involved. And Bitcoin is better than gold in every metric. And it's doesn't have the toxicity of gold. So why bother with gold? I mean, I understand that you've got gold-backed currencies in these other countries, and that's a factor, and that's part of the dynamic. But I feel comfortable walking away from gold and focusing purely on Bitcoin.
Talking about, well, there are dirty Bitcoin miners, right? Do you invest in miners or just pure Bitcoin?
They're not dirty Bitcoin miners. The secret about Bitcoin is that all the energy used in Bitcoin is either stranded or renewable energy. If you were to remove Bitcoin mining from the electric grid of the world, carbon emissions would be completely not changed one iota, because they're using stranded energy, they're using wasted energy, and they're using renewable energy. That's the vast majority of energy. And according to the Mining Council, which Michael Saylor started and he's a part of, the carbon emissions of Bitcoin, even though the hash rate's gone up dramatically, carbon emissions have gone down. So we're heading to an era of zero carbon emissions for Bitcoin. It's the cleanest energy. It's the cleanest industry in the world. So it's not dirty, and you can't use that word. Compared to gold, which is toxic, dirty, slave labor, it fosters bad behavior. It's
Okay, I'm curious to get your thoughts, Max, on a Bitcoin ETF, because when I was down in Miami, that was really the topic at hand. People, really, trying to figure out, when will it land in the U.S. and what kind of a, game changer would that be? A recent NASDAQ survey found that the majority of financial advisors would be looking to add Bitcoin to their clients' portfolio if there was an ETF. Now, we've seen there are ones in Canada. How far away are we from one here in the U.S., and is it that big of a deal for you?
Well, there are several countries with Bitcoin spot price ETFs, not the U.S., and they function fine, and the due diligence required to launch those products is fine. In the United States, a couple of things are going on. First of all, you have Barry Silbert over there at Grayscale, and they've been pushing to convert their trust into an ETF, but they've been stonewalled by the SEC, who claims that, or Gary Gensler, he'll claim that the price discovery in this product is not sufficient to qualify for them to give it an ETF. And that's patently wrong. That's patently false. They have approved for a futures-based Bitcoin ETF product. Now, and I know, anyone who's been in the markets, that futures-based ETF products are almost guaranteed losers. It's a horrible product. It's not suitable for retail. It's not suitable for any investor at all. That product was launched. I think more than one was launched. They're doing horribly. And so why would Gary Gensler purposefully launch a known toxic product, garbage product, into the market and not allow for an ETF, spot price ETF, that's already established itself on markets around the world? And his arguments against price discovery are fallacious and misguided. Why would he do that? Why is Gary Gensler? So it's a shame that Gary Gensler is such an obviously, he is a regulator who's in the pocket of Wall Street, who considers Bitcoin to be a threat. There's absolutely no question about this. The Gary Gensler is corrupt. I mean, I would, if I said, he just talked to Jon Stewart in an interview on Jon Stewart's, ill-fated Apple TV show. And Jon Stewart took Gary Gensler apart shred by shred and proved and showed to him in no uncertain terms that he was one of the worst and most corrupt public officials in America. And it was shocking. And Gary Gensler had nothing to say to defend himself because he's disgusting. But it doesn't matter. I mean, it would be great to give Americans a chance to participate in Bitcoin, but if Gary Gensler wants Americans to be poor, uneducated, living in the gutter, and being killed by the ravages of inflation, that's up to Gary Gensler. He's got blood on his hands. Gary, you schmuck. You should just resign and give the world the benefit of not having you have a public office. You're a gross, disgusting human.
Okay, I think you answered my question.
Yeah.
Okay, want to go back to one of the main arguments of the debate that Frank kept bringing up is that Bitcoin doesn't have the history, obviously, of gold. When we're talking about the bullish scenario for Bitcoin, there's no shortage of news. We have the war in Ukraine, Russian sanctions, Canadian trucker crisis, CPI, PPI. But focusing on inflation, the 40-year high we're at, I know you're going to say, hey, Bitcoin's still around 40,000. That's great. But shouldn't it be much higher given the landscape we're in? And to Frank Justra's point, it has not been tested in a higher interest rate environment. And now we're headed in that.
Well, a couple of things. As far as Bitcoin not being tested, I mean, the same argument was made about the horse. Back in the 1920s, it had been the primary means of transportation for 3,000 years. Then the car came around, and within 10 years, we didn't see many horses anymore. Bitcoin is that kind of step change in technology and money, where it obviates and kind of makes everything that came before it completely obsolete. And that's what we're seeing, and it's proven itself in the amount of time it's existed to be a suitable replacement for fiat money and gold. And that's why it's driving adoption. That's why countries like El Salvador are making it legal tender. And so that would be my answer to question number one. Question number two is that markets are discounting mechanisms. And I think the move to 70,000 we saw in Bitcoin was discounting the future of a post-fiat money world. And now as we see that history catching up to reality, you've got a pullback. It's off, 40% from its high. And it's building a base at this level, 40,000. And I still have 220,000 as a target. And I still think it could be hit in 2022, right? That's certainly within reason when you look at the fact that this fiat money world is collapsing, the central banks are collapsing, the one in Lebanon collapsed, the European Central Bank, the ECB is collapsing, the Federal Reserve Bank is, I think, under enormous strain now to try to maintain their portfolio of junk bonds that they are going to have huge problems rolling over. And so I don't agree with Frank on those points. And historically, he's not counting how when revolutionary changes in technology take place, it has the impact of transforming the entire market in a huge quantum way. And this is what we're seeing with Bitcoin.
I think, and another point I'd like to get your thoughts on, something else that perhaps disturbs the gold community when looking at the Bitcoin community is the overexuberance of the Bitcoin community. You saw the Bitcoin Miami conference. It's a huge show. It's a party-like atmosphere. You have the laser eyes. You saw the New York Post article coming out saying everyone who invests in or likes Bitcoin is a psychopath. Calling it, well, if you're part of the Bitcoin cult, it's been referred to as a cult. What do you say when people say, this is nothing more than a big giant party?
I think what I'd say is that they've run out of substantive arguments, right? They can't attack it on the technology. They can't attack it on the fact that the points that are made in terms of its superiority to gold and fiat money. It's being adopted by countries, made legal tender in various countries. The adoption curve is increasing. All the fundamentals are incredibly strong and getting stronger. So therefore, those critics who are still in the room are reduced to ad hominem attacks and making ludicrous claims as they're doing now, because they have just they have no substantive arguments to make. So they'll say, they'll make wild claims as they do. And Bitcoin doesn't care. It's still going to continue on the way it's going to continue on. I have seen in my almost 12 years in Bitcoin, a lot of people capitulate. A lot of critics who were adamantly against Bitcoin, including Michael Saylor. Michael Saylor in 2013, he didn't like Bitcoin. He's tweeting about how
I saw those
he
tweets
didn't think it was
recently.
going to work. He then capitulated. Probably watched Kaiser report enough to finally figure out that he was wrong. This is true in many, many cases where people who start off skeptical or critical of Bitcoin, they eventually capitulate because they do the work. Anybody who does the work, and as Michael Saylor has said, anyone who spends 100 hours actually doing the work to understand Bitcoin becomes a Bitcoin maximalist. Nobody who's ever done the work into Bitcoin ever comes out the other side being critical of Bitcoin. So if you're talking Frank Giustra or you're talking anybody else, if you ask them any 5 questions that would illuminate whether or not they actually understand the technology, like 5 basic technological questions about how it works, they would give you 0 answers because they simply have not done the work. And that's true universally, ubiquitously. Anyone who's done the work becomes a Bitcoin maximalist. If you are not a Bitcoin maximalist, it's because you have not done the work. And that is true. It's been true for many years now, and it's true today. Show me a Bitcoin skeptic, and I'll show you somebody who can't even answer any basic questions about it, who hasn't done the work. So that's just the bottom line truth, Daniela.
Let me ask you, you brought up the forecast. I know in the last episode we spoke about how you took heat for your $220,000 call. You're still keeping it on the table. But I want to say it's pretty conservative compared to Michael Saylor's, future call of $1 million Bitcoin. I was also speaking with Kathy Wood. She has $1 million on the table. Do you put that into the cards?
Eventually it will, like in Alzante, and by the way, we're starting a new fund called Alzante Capital, and you can find information about it if you send an email to hello@alzantecapital.com.
I think we got it. Yeah.
The price is becoming less and less of a factor because they've entered into hyper Bitcoinization. It's becoming a unit of account. So people don't ask what the price of the dollar is, and people aren't going to be asking what the price of Bitcoin is because it just becomes a unit of account. That's where we're headed. We're headed toward hyper Bitcoinization, where people are just immersed in a Bitcoin world, and the price in fiat terms is not really going to matter much. It's not really going to be discussed because we move beyond fiat. And with hyper Bitcoinization comes a lot of other societal goods and benefits, which are more philosophical, but nevertheless, there's a huge benefit coming beyond just the use of Bitcoin as the ultimate store of value and medium of exchange.
So just, wrapping here, I started off by saying for Michael Saylor that the Biden mandate was really like this green light moment for him in terms of Bitcoin adoption. Looking throughout your journey with Bitcoin, your love affair with Bitcoin, what would you say was the moment that defined it for you, where you were like, okay, this is going to be this moment, or this, whatever event that happened made you realize there will be mass adoption? Was there that one moment for you?
Yeah, it happened in 1996 when I invented the first patented virtual currency, patent number 5950176 on the U.S. Patent Office. I realized that virtual currencies would take the place of everything else because people on the internet, people were accepting the virtual currency as money. So the issue with my invention is that it was a centralized version of a digital currency, of a virtual currency. There were several of that time that were on the internet, and the cypherpunks who were beginning their work into what became Bitcoin, which would be a purely decentralized monetary network, had a couple of different attempts. Adam Back had Hashcash, and there were several other attempts to create a Bitcoin. There were 20 different versions of Bitcoin before Bitcoin, and there have been 15,000 different versions of Bitcoin after Bitcoin. And none of them before Bitcoin have worked, and none of them after Bitcoin have worked. They've all failed, except Bitcoin. Bitcoin's the only one that had hit the mark right on perfectly and created that perfect incentive model that captured the world's imagination and is now becoming global standard. So I would say my moment of illumination came during my dot-com days. When I saw Bitcoin in 2011, I said, oh, wow, okay, I get it. It's a digital currency, but it's going to be decentralized, and it works on, you know, the hash cash, but with the difficulty adjustment thrown in. So this can take over the world. But talking about it, as we did at that time, a lot of people hated us to talk about it because, especially the gold bugs, because they didn't put the work in.
Oh, Max Kaiser, what are we going to do with you? What are we going to do with you? Okay.
I'm right. Look, I mean, I've been right for, you know, now for 12 years. The best performing. I'm the best one of the best money managers in history because I've had a heavy position in Bitcoin for 12 years. So it's been compounding at like 100%. And my new fund, Elzante Capital, with Stacy and Corey Clipston, is going to be another hugely interesting fund.
Has Michael Saylor reached out to you about it? Is he interested in it? Have you spoken to him?
I haven't. You know, the thing about, you know, we're competing with each other. You know, he's trying to gobble up all the Bitcoin in the world, and so am I. So, you know, we'll see. We'll see who comes out the winner on the other end. He has to disclose all of his Bitcoin because he's a public company. I don't have that requirement. I have no requirement to disclose my Bitcoin for 12 years. I have no requirement to do so, and I have never done so. Where Michael must disclose, and he does disclose. But I'll say that at the end of the day, the race is on, and we'll see who comes out on top. Elzante Capital is going to be just like Bitcoin Capital was that we started in 2013 with the first venture capital fund in Bitcoin. It's had one of the best track records ever in history. Heisenberg Capital, I did that one, another incredible track record. 40% hit ratio on unicorns. So I don't think anyone has that high a hit ratio nailing unicorns in the VC space, not even Tim Draper.
You said you're both gobbling it up. I pictured two Pac-Mans at it. But final thought for you, because one of our interviews you had mentioned, you know, going back to gold and silver, you had a ton of it at a point that you were selling it. Have you finished selling all of it? Are you done? And is there anything that would ever perhaps convince you or motivate you to re-add some gold to your portfolio? So first, did you sell it all, and would you ever go back?
Yeah, it's all gone. I mean, I have one gold ounce that I use.
Keepsake.
Yeah, I use it as a coaster in the kitchen. And sometimes when I'm at Jim Rogers, I like to take it out and say, look, Jim, I've got a gold. That same gold ounce Jim Rogers has been carrying around now for 40 years. It hasn't moved up in price, or certainly not in the last 10 years.
It has moved in price, Max. It just...
No, over 10 years, it's flat. It was 1900 10 years ago. I mean, that's simple mathematics. I mean, is that now off limits on social media? We can't talk about math. 2 + 2 = 4, Danielle. It still equals 4. It was $1,900 10 years ago. It's $1,900 today, thereabouts. It hasn't moved. Sorry to be so, direct, but it's done. It's been dead money. If you have money in gold for 10 years, you know, you would sound as silly as Peter Schiff.
Well, it was really fun reminiscing with you. It's always so nice going down memory lane with you. So I appreciate your thoughts. I hope you had fun.
Well, you know, I'm rooting for you. I realize based on your words and the sound of your voice that you're underinvested in Bitcoin. Because if you were adequately and sufficiently invested in Bitcoin, you would be doing more of a tap dance on the table right now, celebrating the new world that's coming because of perfect money. So I suggest whatever your Bitcoin position is now to increase it by a factor of 10x, and things will start looking better.
You're gobbling all of it up. Like you said, you're taking...
That's right. You better hurry. Under $100,000, it's like free. You know, 100,000 is the new $5.
Max Kaiser. I give my love to Stacy. So tell me a little bit, when you're obviously not in El Salvador now.
Right.
You're fully focused on what was it? Elzante Capital? Was that it?
Yes. Elzante Capital.
There you go.
You can find out more by writing an email to hello@elzantecapital.com. Bitcoin.com. And it's also on Twitter. You can follow on Twitter. And we have a Telegram group on Twitter. And, you know, we come back here occasionally to water the plants. And then we head back to El Salvador. And we'll be going back there tomorrow, heading back to El Salvador. We got some meetings set up to bring in. We've started essentially a Bitcoin programming boot camp run by Jimmy Song. We've got dozens of local folks signing up. There's an incredible amount of engineering talent in El Salvador that nobody knew about. And so we asked the question, hey, how would you like to learn Python and become a Bitcoin developer? And, you know, like dozens and dozens of people showed up within an hour. So this is an untapped resource. GDP in El Salvador was up over 10% last year. I think it'll double that number this year. The tourism is exploding. All that exported gang terrorism from America that's been plaguing the country for decades is being eradicated now. Plus the Bitcoin phenomenon, plus other natural resources. This country is going to be the fastest growing country in the world next year.
Life is good if you're Max Keiser. Thank you so much, Max. Thanks for joining me for this special anniversary edition.
All right, my pleasure. We'll see you next year.
Awesome. Well, I hope sooner than that, but yeah, yes. All right, thank you, Max Keiser, and thank you all for watching.
By the way, next year when we have another one of these get-togethers, I predict the price of gold will be exactly $1,900 an ounce.
All right.
Bye.
Well, bye, Max Keiser, and thank you all for watching. We'll have much more coming your way, so be sure to stay tuned to Stansberry Research, and don't forget to sign up to get notified of all the latest content coming your way at danielakamboni.com. That's it for me. Thanks for watching.
You want to know how to be a successful investor? The answer is stay with what you know. Don't listen to me. Don't listen to TV people, internet people. Just stay with what you know. If I told you you can only have 20 investments in your life, you would be very careful. You wouldn't be jumping in and out, listening to hot tips every day, every month. You would stay with what you know and you would become a successful investor. Everybody watching this knows a lot about something, whether it's fashion or cars or sports or something. When you see something that you know is going to be successful and exciting, don't just say, oh, that's going to be great. Don't tell all you. Then you go and you do your research and you figure out how to and if you should invest and how to invest, and then you invest. You will know it long before I will, or long before other people in the investment community. You will also know when to sell, because you will know when something's going to change again. Nobody likes to hear it. Everybody wants a hot tip. Everybody wants to be rich this month. In those days, we did nothing but focus and concentrate and dig deep and dig deep and dig deep.
Hi there, Greg